asking me to share my experiences on this subject. Uh, let's go into this topic right away. So the topic is advances and IRAC norms, and let's look at various issues on advances, and then let's look at various issues on NPAs. So first is, why are advances important? Two things. Our fees are dependent on the advances. So if in a particular slab your advances of the branch fall in, then your fees are based on that, and at a certain percentage you get the fees for the LFAR. The second is, advances constitutes the major reporting in the LFAR. So about 40% of the questions are on advances. And the second is, if you have to make any significant change in the P&L or any significant change that happens in the P&L is only because of an MOC which is passed through advances. Because if an MOC is passed for advances where any standard asset is added as a substandard or doubtful loss, or whether there is an enhanced provisioning in any advance or a downgrade in any category, there is a P&L impact. So advances constitute a very important figure in the bank branch audit verification. So let's look at how we go about checking the advances and what do we actually check in the advances. So one, we compulsorily have to verify in a format which is given, with a format which is given in the LFAR, which is a 25 question format, which has to be filled by the branch management and has to be given to us. And that format is for advances individually more than 10% of the total advances of the branch, or 10 crores, whichever is lower. So if you have a bank with sanction limits of, let us say, 95 crores, then all accounts over 9.5 crores you'll have to see. Otherwise, 10 crores or 9.5, whichever is lower. So 9.5 crores being lower, we'll have to verify all advances over 9.5 crores. Now, apart from that, we have also to verify and comment on the top 5 standard advances, and also to comment on processes and systems of other advances based on a sample check of each product type. So you may choose a vehicle loan, you may choose a educational loan, you may choose a loan against property, loan against shares, loans against fixed deposits, an educational loan. You could choose a sample from each of these so that you cover each product type. You may choose a bill discounting, you may choose a term loan, you may choose a CCOD, you may choose a guarantee check, you may choose a LC check. So you have a comprehensive bouquet of all loans and advances so that you cover them holistically. Now this is as far as the coverage is concerned. Now what do you actually check? An advances is an end-to-end process which starts right from the credit policy. So is there a credit policy in the bank? Is there a credit policy available to the branch? Because now most of the things are available on the intranet. So the credit policy is there, but does anybody who's operating or looking after advances, has he read the credit policy? Because credit policy will tell you 100 things. Are we following all the 100 things? In many cases, we don't follow most of the things because these are on an idealistic basis written, something which has to be there on best practices prevalent across the globe. Not necessarily we would be following that. So you may get across a lot of issues which may not be in sync with what the bank is actually practicing. So one is the credit policy. is the actual practice followed by the bank in sync with the credit policy, or whether there are any deviations from that. And mind you, if you look into each and every item of the credit policy, you will find n number of issues where the bank may just not be in compliance with the credit policy. Because the credit policy is at a Himalaya level, I am at a Sahyadri level. So huge difference in the 30,000 feet and the 1,000 feet ground reality when it comes to actual implementation and what is stated in the policy. The second part is the risk pricing. How is the pricing for the advance done? Again, is it linked to an ECLR? Is it linked to an MCLR? Is it linked to a PLR? What is the rate it is linked to? And most of the branches have no say in determining the rate of interest. If the product is there, the borrower has a particular CIBIL score. If the amount is at a particular level, for most of the retail loans, the pricing is fixed. And there is very little discretion for a branch head or any other person to basically make any changes in the interest rates. So, what is the basis on which interest rates are determined? Now, whether these are correctly fed in the system, whether any unauthorized alterations are made to the interest rates once these interest rates have been fed in. So please check the next after the credit policy is the interest rate fixation. Then comes the actual application for the loan from the borrower. Does the borrower actually apply for the loan on a particular date? Is there a particular format which is there for the loan application? Is there a particular minimum set of documentation which you should submit along with the application? Is there a minimum processing fee which is collected along with the application, so that if the application is not processed, because obviously the bank has also wasted its time, so some percentage of the professional fee is retained and only a part is returned back. So what exactly is the process there, policy there? And is it followed, or is there a waiver also given? Now, one more reason why the application is necessary is because it's an evidence that the borrower is willing and wanting to take the loan. The application has come from his side, and also for the purposes of monitoring the turnaround time, so as to introduce efficiency and make the process of credit underwriting more effective. The application date and time is noted so that the turnaround time within a particular days of processing, as is fixed by the bank, can be monitored. So you have the credit policy, you have the risk pricing, and then you have the loan application. Now starts the real part from the bank, the credit sanction, or what is known as the appraisal process. So they will look through all your documents, they'll see the condition, the character, the collateral. Based on that, they may sanction some amount, and what they issue is a pre-sanction note. And a pre-sanction note is a listing of all terms and conditions, mainly the repayment period, the interest rate, the collateral, the obligations, the date on which the account will be an NPA, the date on which the repayment will fall due. Now, this sanction note has to be accepted by the borrower. And post acceptance by the borrower, then and only the bank will issue a formal sanction letter. Once the sanction letter is issued, then an account master will be made in the system, and all the terms and conditions of the sanction will be fed in the account master. Now that has to be checked whether it has been correctly fed in from the sanction letter. And again, the monitoring part is that it is not unauthorizedly tampered with. So you may sanction 11% as is there, but somebody is somebody's friend, or maybe for some collusion goes and tampers it and makes it 8%. So that's any unauthorized modification to the interest rates or terms of repayment will also have to be looked into, and this will also have to be locked in once it is fed in, and it will only be changed at an appropriate level. Many banks have this practice that At the branch, there is no authority for basically changing an interest rate or the repayment period. It's all centralized at the regional level where there is no basically conflict of interest. Then you have the documentation part, the entire process of maybe obtaining the deed of hypothecation, the demand promissory note, the letter of containing security, proper stamping, signing of the documents by the borrower, and post that documentation, will there be a dispersal of the facility, maybe direct to the supplier, also based on the fact that there might be an end use of utilization certificate taken from a chartered accountant. And once that disbursement is done, the process is actually complete and the borrower actually becomes liable for repayment. Now then there is the monitoring, supervision, so that the borrower is paying his installments in time so that it doesn't become overdue and no classification in the SMA category or maybe subsequently in the NPA category is necessary. There are periodical requests for term EODs. There are requests for enhancement of the limits. There are requests for reduction of interest rates. And this all forms part of the renewal process. Renewals happen every year. Reviews can happen even earlier. And if the renewal is not done for a period more than 180 days, the RBI IRAC norm says that this will be an NPA. So that's the importance of renewal also. And a lot of banks do something which is known as a short review or a technical review. They can maybe do it once, but they can't do it twice or they can't do it continuously. An actual full-fledged review will have to be done. And if it's not done, anything 180 day plus the old renewal date, you have an NPA. Then you may have various issues. The borrower is not paying up. You may approach the courts of law. You may approach maybe the IBC, the DRT, the Lok Adalats, the tribunals. You will have all the suits, the securitization notices, the physical possessions. Then maybe you might have auction processes where you may fix a reserve price and go and sell the security to recover your money. Or you may do an OTS, a compromise, and give some concessions, or you might even give the accounts to an ARC. You may sell the assets, and then you will have the concept of securitization receipts, SRs kicking in. So the advances gets replaced by an SR, but the advances, the gross NPA, net NPA goes down as a result. And then finally, you have a situation where the borrower may have repaid the entire amount, and if the entire amount is repaid, then maybe the account closure process and maybe handover of the securities or the original documents back to the borrower. So that completes the vicious loop of advances. It's an end-to-end process. So in the advances which you select more than 10 crores or 10% of the size, whichever is lower, please do an end-to-end check. And for the rest, do a test check. But when you are checking those few select advances, all over 10 crores or top 5 standard advances, or maybe one of each product type, do an end-to-end check. Don't do a test check in these accounts. In the rest of the account, you can do a test check, but in these main accounts, you may do or you will have to do a 100% check. So that's as far as the advances end-to-end process is concerned. Two key questions in the LFAR are question number 21 and question number 23. Question number 21 asks you about the operations in the account, and question 23 asks you about the overview of the account. And both of these imply that the branch manager should give a complete detailed synopsis or his opinion about the account conduct. And in most of the time, the branch manager writes only one word, either good, okay, or satisfactory. Now that is completely unacceptable because he's supposed to give you a detailed overview. It's not a one-line answer. That is as unacceptable as we writing yes, no, or not applicable in our LFAR for the questions. The long form audit report, especially for the advances, asks us to be specific and report on specific adverse issues noted. And if you have not checked 100% of the advances end to end, please don't report as yes, no, not applicable. Be very specific and state that these were the accounts which we checked. And in those accounts checked, this is how we checked, and this is what we checked. So what you did, how you did, and to what extent you did should be a part of every answer to the questions in the LFAR. So I'm repeating again, what you did, how you did, and to what extent you did. And you'll find especially issues on in advances on that the conduct of the account is very poor, in the sense there is inherent weakness. There is no turnover in the account. So the turnover ideally has to be 4 or 5 times the sanction limit. Here the turnover is not even 2.5 times, or at times the turnover is not even equal to the limits. There are just interest credits coming in. There are check bouncings. The sales are falling, the profitability is falling, the current ratio, the debt equity ratio, the net profitability ratios are all going for a toss. The insurance is not taken properly, the stock statements are not taken properly, data is not coming from the borrower on time, the borrower is just not cooperating. There are chunks of cash withdrawal or deposits. The sanction limit does not churn itself, so that if the 100 rupees is the sanction limit to the borrower, the account will always show a balance of 95 rupees or more. So it's more or less almost everything of the sanction is being utilized and not getting churned, which implies that the borrower may have actually made losses and the bank is funding the losses of the borrower. So please have a look at all these features and then decide to comment adversely, and then have an overall view of what the risk of the bank is as far as the credit risk is concerned. If the bank has invested 100 rupees, what are the NPAs? What are the SMAs? What is those percentages? What is the likelihood of the accounts which are as NPAs may turn bad and may need provision? So this is what we need to check as far as advances are concerned. I had a quick wrap up. I pause for a minute. Any questions at this stage I would like to take up? Any questions? Fine. I'll just go ahead. Please also look up what were the issues raised by the concurrent auditors. What were the issues in the previous year's statutory audit report? And I mean, not only just discuss with the concurrent auditors, also discuss with the previous year's statutory auditor. So it's not just sending an letter to them asking for an NOC. Please pick up the phone, speak with them, check with them what they did in the audit last year, what were the issues they found out, how did they plan and execute the audit. So you might get some valuable tips there. Or alternatively, also in the concurrent auditor, you can ask with them, how do they go about checking the advances? How are they satisfied about the conduct of the account? How do they ensure there is no diversion of funds, no siphoning of funds? Whether the end use of funds is happening as committed in the sanction letter. How is the borrower managing to stay afloat in the challenging times? How are his tax payments done? How is his GST payment done? Does that indicate that the borrower is making profits? So the borrower will have to do a complete submission of all the details which are required by the bank as well as the auditor to check. And the auditor can practically ask anything, or he can even go and inspect the stocks of the borrower or check his office visit. So generally we make a practice, if possible, to check 1 or 2 big borrower accounts and then be completely satisfied that the drawing power calculated is right, because the drawing power will completely impact the NPA classification or not. So here are advances reply to each and every question in the LFAR, whether the advances have been properly appraised, whether they have been properly sanctioned, whether they have been properly covered by documentation, whether they have been properly disbursed, whether they have been properly monitored and supervised, whether the review and renewal has taken place on time, whether they are restructured or sold to ARCs as appropriate, or whether you are doing an OTS, write-off or a waiver. Then finally, meeting any court issues, if any, following up for recovery, appropriating the recovery to principal or interest uniformly as the case may be, and finally closing the accounts and handing over the original documents back in case the loan is completely repaid. So that's in short the start end-to-end flow of advances. Now let us look at the IRAC norms. Now what are IRAC norms? IRAC norms are nothing but the income recognition and asset classification norms. And these have been prescribed by the government way back in 1992. So these are 30 years old. So even now, when somebody at the RBI speaks on divergences, they are surprised to note that there are so many divergences. When they say we have issued these norms 30 years back, so there would be no issues they feel on interpretation. Again, they have issued a lot of FAQs, so that their view on how the circular should be interpreted is very clear. So the Reserve Bank is very sacrosanct in keeping with the letter of the law, means what they have actually written, and they would follow this to the T. So let us look at some of the important terminologies or some of the important issues in the IRAC norms. So first is, what is NPA? We all know an NPA stands for a non-performing asset, and there is a 90-day overdue norm generally for it. And then you classify those accounts as substandard, doubtful or lost. In doubtful, it is D1, D2, D3, depending on the aging. So NPA as defined by Reserve Bank of India is any asset which is not a standard asset. And an NPA is any asset which ceases to earn income for the bank. And an NPA is any asset which displays more than the normal banking risks. And an NPA is an account in which the current net worth of the borrower or the guarantor or the market value of the securities which are pledged to the bank, they undergo a reduction, and as a result, the borrower is not able to repay the bank loan either in full or in part. So an NPA is somebody where there is a credit risk or a default risk that the bank may lose some money. Was this to be closed at any point of time in the near future, which is about a year? So having been clear with what NPA is, now let's look at some of the basic norms which govern an NPA. An NPA is solely based on the record of recovery and not based on the security which is there. So if it's overdue for more than 90 days, even if there may be a 10x times security on possession with the bank, still it will be treated as an NPA. Now, the classification moves first from substandard to doubtful and a loss. But if there is an erosion in the value of security by more than 50%, then you can straight away take the advance to a doubtful category rather than a substandard. And if the assessed value of the security is fallen over 90% and it doesn't cover even 10% of the outstanding, then you can straight away classify the asset as a loss asset. And for the loss asset, you have to make 100% provision. For a doubtful, you have to make a 25, 40, or 50% provision on the aging the doubtful was. In D1, it's 25, D2, it's 40, in D3, it's 100. So what exactly is the provisioning which you need to do? Not just depends on the substandard status, but it also depends on the fact whether the erosion in security is more than 50% or 90%. Now let us say if the account was classified as a fraud. If the account was classified as a fraud, then either it has to be provided immediately or it has to be provided over 4 reporting quarters from the date of the quarter it was first identified and reported to RBI as such. Now, if any advance is reported to Reserve Bank of India with delay, which is a fraud, then you need not wait for the 4 provisioning because they would already have elapsed. So provide straight away. So in case of a normal course, you have 4 quarters to spread over. In case there is a delay in reporting, then you provide 100% immediately. If the stock statement is not received more than 90 days, take it as 0. Another 90 days for the overdue status. So any stock statement not received more than 6 months is an NPA. Any overdues in the account for more than 90 days is already an NPA. Now, what is an overdue? Overdue is the date from which it falls due for payment, and that date for payment is what is fixed by the bank. So the overdue date is fixed by the bank, and that is the concession or the grace period given to the borrower to repay the loan. And this is communicated to the borrower in the sanction note as well as the sanction letter formally, and his acceptance obtained. So this is the case where if this is not done, so the review or the renewal is not done for more than 180 days, then the account will be an NPA. So externally, in the case of a fraud, you can go directly. If the stock statement has not been received for more than 180 days, you can move directly. Or if the collateral security has fallen 50% or 90%, you classify it as a doubtful or a loss. Or if the renewal is pending for more than 180 days, it is an NPA. And renewal is the date, the overdue is the date which is fixed by the bank for the repayment. Now, generally, all accounts will be classified as such. There is an exemption given only to central government guaranteed accounts from the provisioning norms, but the income recognition norm will apply. So if a central government guaranteed advance has turned an NPA, you need not provide, but definitely you will not have to book the income or reverse the income if it is not received. Again, loans to staff members, there are cases where the principal is taken first, and post the principal repayment, then only the interest repayment starts. In such cases, you can't treat it as NPAs, and that portion of interest which is not realized need not be considered. So, loans to staff members where interest is payable after the principal period is exempt if it is not recovered, because we will recover the principal. And in such cases, there is a special exemption from the IRAC norm classification. Now, one more key issue where there is divergence in many cases, and that is the instance of a solitary credit. The instances where there is no receipts of repayment throughout the year, and the repayment is only received at the end of the year. And we all know that in banks, most of the recoveries happen in the last, and maybe most of the recoveries also happen on the last day itself on 31st March. Then what do you do in such accounts where there is an inherent weakness? Now, the Reserve Bank of India has clearly given in its circulars that where the account indicates inherent weakness, then based on the data available, the account should be classified as an NPA if the bank is not able to satisfactorily provide any evidence regarding the source of credit, regarding the authenticity or genuineness of credit. So the bank will have to prove that this credit was not given by giving another credit to somebody else, and this is just an evergreening or a window dressing they are doing to reduce the NPAs. So the recovery has to be from genuine sources. And it has also to be ensured that the account does not fall out of order hence. Accounts which show inherent weakness, and if there is a recovery at the year end and subsequently there is no recovery, and maybe later on that account has become NPA, then RBI will show no hesitation in adding that account as an NPA and adding to your list of divergences. So at times you may go into the letter of law in depth and just introspect and check whether any such cases of credits at the last day are there, maybe in cash. And what is the explanation, the logical explanation for these recoveries? If the bank is able to satisfy you, then fine, you can classify it as a standard. Otherwise, appropriate classification as an NPA will have to be done. Now, once an account is an NPA, when will it get upgraded? An account which is an NPA will get upgraded only after all facility arrears in that account are removed. So as of the date of upgradation, all the accounts of the borrower should have no overdues, nil overdues. They should not be even in an SMA category. And it is only if they are in that category, then the account will be upgraded. So upgradation is only after recovery of all arrears from all linked accounts of the borrower. Now, agricultural advances. Agricultural advances don't follow the 90 days. Instead of that, they follow the crop duration. And you may have a short-term duration crop or a long-term duration crop. And what is a short-term duration crop and what is a long-term duration crop? The state level bankers committee decides on what exactly is a short-term and what exactly is a long-term. In a short-term crop, you are given a moratorium, and in a short-term duration crop, you will treat this as an NPA if it is overdue for more than 2 seasons. And in a long-term duration crop, you will treat it as an NPA if it is overdue for more than 1 crop season. So what is the crop season is what is determined by the state level bankers committee. So check up what is their classification of a short-term and a long-term. And accordingly, your agricultural advance is given for what product. Based on that, you classify the loan as a non-performing. Now, when you provide for advances, you have to ensure that on substandard it's a flat provisioning. But if it is doubtful, then what you do is you provide 100% of the unsecured portion, and only on the secured portion you provide the balance as the case may be, based on the security. So securities are value, especially building, which is the primary collateral, the primary secondary collateral. What is value? Value can mean different things to different people. You have a fair market value. It is only fair in paper. In fact, it's the most unfair value because it never gets realized. Then you have a realizable value. The realizable value is a value which hardly gets realized. The fair is a very optimistic value. The realizable value is a little less optimistic, but again not realizable, especially in the pandemic. Now you have something which is known as a distress value. And that distress value is the actual value at which a transaction may take place. But a distress value may not be acceptable to the seller. A seller may expect a market value and maybe bargain and come down to a realizable value. But here is a buyer who is not even willing to take it at a distress value. Then you have another values called a ready reckoner value on which the stamp duty is levied and paid. And you have another value which is the book value, which is the actual value at which an asset may be lying in the books of account. And then you have another value which is known as the insurable value on which you are actually paying insurance. So if the value of the security pledged to the bank is 1,000 rupees, and it is all made of iron, steel, or some other heavy material which is difficult to remove, then what do? Would you value it at fair, realizable, book, ready reckoner, distress value? What is the value you will take? And at times, there is a rule that valuations should not be less than 3 years old. And you have cases where the valuation report is not on record. Now, would you make the value actually as nil, or would you take some amount at it? And what is the amount you would take? Now, whatever you take, you have to be skeptical and prudent and think that if you were going to buy that property, how much you would have paid, ideally. And maybe you should ascribe that value to it as close to a distress value, as optimistic as a realizable value, but nowhere close to the myth of the fair market value. So you decide the valuation because the valuation will change the provisioning. The provisioning will change the profitability. So this is how seriously you need to value. Now, when you calculate the credits in an account for the purposes of ensuring that the credits are more than the debits, and the credits are more than the debits by way of the interest debited, and the fact that there are credits in the account, ensure that check returns are not considered as a credit. So you'll have a check return on one side and the credit item, and you will have a check return in the debit side. And if you see the total will include the deposit part. So the credit turnover summation statements could always be added up for these check returns. So ensure that you reduce this and get your actual credit turnover in the account for calculation of NP. Now for agricultural advances, there is some restructuring for advances which are affected by natural calamities. And please note down the circular. That circular is dated 25th March 2015. The 25th March 2015 circular talks of what is a natural calamity, and they have defined 12 types which can fall under natural calamity. And then you can extend this loan by moratorium, which may range from 2 years to 5 years, depending on what exactly is the crop loss. So if the crop loss is 33% and more, then only it is defined as a natural calamity. So for 33% to 50% of the crop loss, you will get a 2-year moratorium extension. If it is more than 50% crop loss, then you will get an extension up to 5 years. Now, any restructuring as per the natural calamity, which will be determined as per this circular of 25th March 2015. And there is one more circular on this which you can look up, is the October 17, 2018 circular, which talks about how would you go about doing relief or giving concessions in those areas. Now, in the current year, there are 2 new circulars which have come in. So please look at these 2 circulars. You can note down the dates. One is the 12th November 2021 circular, and the next is the 15th Feb 2022 circular. The 12th November 2021 circular states that the date for repayment of a loan has to be specifically specified in the loan agreement. So when will be an account considered an NPA, when will it be considered as an SMA, has to be communicated to the borrower in the sanction letter. And this circular also states that the identification of NPAs has to be done daily as a day-end exercise. You can't classify NPAs at the end of the month or end of the quarter. So now you have not only the automation of NPAs as per the September 2021 circular, the September 20 circular, it stated that you finish off automation of NPAs by March 21, extended to June 21. You also have the fact that it should be calculated daily. And this calculation methodologies should be communicated to the borrower and also intimated by the bank by hosting it on its website. So the dissemination of the fact that when an account will be an NPA, when it will be an SMA, has to be known to the borrower and to the world at large. Now the 15th Feb 2022 circular states, it in fact reaffirms that the 90 days comes to an end on the day end itself, and that classification has to be done at the day end. So if the 90 days falls due on March 31st, it is not April 1st, it is March 31st only. So a lot of chartered accountants were taking the interpretation that 31st March end of day means 1st April start of day. So an account will never fall NPA on 31st March. It will fall NPA on 1st of April. That is not correct. This circular has once again reconfirmed that it is a day end process and the classification falls due at the day end. And this is possible because the 14th September 2020 circular talked about automation of NPAs. And this is where the RBI expects all NPAs to come to the system, except for cases where it could be manual, say, as a result of disclosures in the stock statements, as a result of huge variation between the audited financials and the stock statement submitted. There is no debt equity ratio, there's no current ratio, no quick ratio matching the prescribed. There's falling turnover, frequent check bouncings, frequent complaints against the customer, falling sales, falling profitability. All this is an indication that the account is weak, and in such cases, you will have to consider this as an inclusive. So 90 days is inclusive at the end of the day. And the next clarification they have given is that the upgradation can only happen if all arrears are recovered. So the entire arrears from all facilities, so if there are 3 term loan accounts on the day of upgradation, all term loans should be performing. There is no SMA 0 also in any of the account if you want to upgrade that account. And the circular also talks about SMA classification. So for term loans, you have SMA 0, 1, and 2. And for cash credits and overdrafts, you have SMA 1 and 2 classification. And there is a requirement to report the Central Reporting Authority for information on large credits, TRILIC as they call it. All advances over 5 crores have to be reported to TRILIC. Now there is a 7 June 2019 circular on prudential framework for resolution of stressed assets. And this circular is a key circular. It talks about implementation of a resolution plan. It talks about an inter-creditor agreement. It talks about credit evaluation by an external source. And it also has provisions for delayed implementation of the resolution plan. So this is a key circular on resolution on stressed assets dated 7 June 2019 circular. And recently there's one more circular passed on September 24, 2021 on transfer of loan exposure. So sale of loans from one bank to another, sale of loans from banks to ARCs. What is the process? How is the accounting done? This will all come in the September 24, 2021 circular. Now let's look at one key topic, which is restructuring. And then let us look at cases where there are divergences in NPs. Now, any questions at this stage before I go?
Any question from the audience? If they have any question, they can ask from the speaker. After that, he will again go on. At this moment, if anyone has any question, they can ask. You are muted, sir. Abhijit, sir, you are muted. Not audible. You are muted.
Efficiency. So MOC is the benchmark for MOC is the benchmark for efficiency. Like in our exams, we used to judge our effectiveness by the number of supplements we took. In the same way, in a bank audit, we look at how many MOCs we passed and how many MOCs we passed for what amount and what was the impact we made on the profitability. So that's one benchmark for evaluating maybe what impact you created on the bank balance sheet. Obviously, if everything is fine, why should there be an MOC? And if everything is not fine, then why only the MOCs which you passed? Why not much more? So let's look at one area where there have been some lack of clarity. And then let us look at cases where there have been divergences. So one is, what is restructuring? A restructuring is something which is in the flavor for the last 2 years. With all the COVID restructuring regulatory packages. And restructuring in its simple form means it is an act of giving concessions to the borrower for economic or legal reasons. And that may be due to his financial issues or problems, that is in financial difficulties. So you may have modifications in the terms of sanction. As regards, there may be changes or reduction in the interest rates. There may be moratoriums given. There may be fresh enhancement of facilities. Or there could be extension of loan repayment tenors also. Or there could be step-up EMIs. So everything will fall under the broad purview of restructuring. Restructuring is simply nothing but a modification of the existing terms and conditions of the loan as regards the repayment and the rates of interest. Now, all restructuring will only be done prospectively. There is no retrospective restructuring. It's all prospective as of and from this date. And you could restructure practically every advance other than an advance which is called as an fraud. So except for fraud accounts, all other accounts can be restructured, even NPAs can be restructured. Now, if the account is restructured at a very broad level, the asset gets downgraded one notch. So if it's a substandard, it will get downgraded to doubtful. If it's a standard, it will be downgraded to substandard. So it's a one notch lower. And you can upgrade it only after there is a satisfactory performance during the repayment period, which is usually of a year. And what you mean by satisfactory performance is there is no default. There is no overdue during the performance period. Now that's satisfactory performance. Now one is project loans. And in project loan, there is a concept called DCCO, or date of commencement of commercial operations. Now that is a very key date, because your moratorium starts from the date of you starting your commercial production, because that's the date from which you will be liable to repay, because commercially you will be viable to repay. Now that's sacrosanct, but it can be modified based on certain terms and conditions, and that could be 2 years for an infra project and 1 year for other than an infra project. And a further extension of a year can be given for both infra and non-infra cases. And that extension can be max 2 years for an infra project, that too if it is facing a court case. So a DCCO extension For a non-infra, 1 + 1, 2 years. For an infra, 3 years, 4 years, if there is a court case which has resulted in a delay. So that's the basis for calculation of an moratorium on a project loan basis. Now you have various circulars on restructuring. And like you had the 7 June 2019 circular for prudential framework for resolution of stressed assets. You had the 1st Jan 2019 circular for restructuring, and that circular was for MSME and GST registered borrowers with exposure up to 25 crores. And that exposure of 25 crores was the overall exposure of the borrower to all banks and all NBFCs. And these accounts which had a valid MSME and GST could be restructured only on the request of the borrower, and where the financial viability was being addressed. And even in this case, if there was a diminution in the present value as a result, then the provision for the present value had to be made in full. So this was the key start of the restructuring circular, the Jan 1st, 2019 circular, which would still apply in a broad way if it is not specifically covered by any of the COVID circulars. And there were other circulars before also which talked of it, but this was a comprehensive circular. So there are circulars dated 7th Feb and 8th June 2018 on this. And then you had the COVID circulars which came in 11th Feb 2020, which gave a moratorium until May. Then there was another circular which gave a moratorium until 31st of August, which we all know last year. And there was the COVID-1 resolution package, which came on 6th August 2020. And the current resolution framework in the current year, which we all need to see, is the resolution framework 2, which is dated 5th May 2021. And again, the benchmark is it should be a GST registered, an MSME. It should have been a standard as at 31st March 2021. It should not have been restructured earlier. There should be a board approved policy talking of implementing the resolution framework 2 and the process by which it will be implemented. And this gives an extension of moratorium for up to 2 years. The COVID resolution 1 of 6th August 2020 gave a moratorium of 1 year. This circular gives a moratorium of 2 years. And this circular says you can't restructure if you were covered by the restructuring circular earlier, that's COVID resolution 1 dated 6th August 2020. However, the dispensation that is given for accounts which were restructured by COVID-1 for 1 year, and as a result of this circular, though it will come in COVID-1, you can extend this moratorium by another 1 year if it is affected by COVID-2 also. So the only change in COVID-2 circular is that this can be done for 2 years. And by another circular dated 4th June 2021, the threshold for resolution of advances has been raised from 25 crores to 50 crores. So the 5th May 2021 circular talked of basic resolution and up to a limit of 25 crores. This limit was enhanced to 50 crores by the 4th June 2021 circular. No changes other than the increase in the limit. Again, in the 7th July 2021 circular, the definition of MSME was increased and broadened to include retail and wholesale trade. So retail and wholesale trade were earlier not specifically mentioned as MSMEs. They were specifically classified as MSMEs by the 7th July 2021 circular. And this talk of again invocation and then making a resolution plan by a certain date. And the earlier date was September 21 and the compliance was December 6th August 21 circular. So this is all about the various circulars which are there. What is key for you is to check whether it falls in any of the COVID regulatory circulars first, because these are specific. And if these don't fall under the COVID regulatory circulars, then whether they form a part of the Jan 1st, 2019 circular, which is an overarching circular, not necessarily applicable to COVID stressed bonds. So borrower which may be showing stress signals even after the COVID is over and he was not affected there, he can still be guided by the 1st Jan 2019 circular. So let's again take a small pause for questions. Any questions at this stage? Too technical a subject. So there's nothing where you can make it non-technical because these are all deadlines and interpretations. So let's now look at the cases for divergence. I take a minute's break before I take the next 15 minutes on cases for divergence, and then maybe any questions, any answers, maybe we could take post that. So any questions at this stage?
Sir, one question.
Any questions in the chat or?
Sir,
Yeah.
One question in the chat box, very simple. Whether classification would be affected due to pandemic? Due to pandemic, any classification, IRAC norms?
Classification will be affected by the pandemic only if it is restructured. In the circular last year, which was basically they said any of the account when it happened in 2020, there was a clear-cut instruction that any account which was a standard as of 28th Feb, but which was an NPA as of 31st March 2020, then you need not classify it as an NPA. You make a 5% provision for 2020 March and the balance 5%, that is 50% you make a provision in March and June 2020. The next year, there was a moratorium in 2021, which was initially till May, which was extended till August, and from 1st September, the moratorium was withdrawn. However, due to a Supreme Court directive, most of the banks did not make provisions or classified accounts as an NPA post 1st September because of the specific stay. However, as of 21st March 2021, the stay was withdrawn, and then banks obviously had to make provision as per erstwhile IRAC norms, and that is provisioning on a daily basis, which RBI insisted. And subsequently, by the 7th April 2021 circular, RBI clarified that their IRAC norms continue as before. There was no waiver or dispensation given to IRAC norms as a result of the pandemic, except for the 6-month moratorium. and they permitted conversion of accounts to FITL, which also they said it has to be recovered by 31st March 2021. So there is no direct benefit as of now. Also, there was an interest subvention given for accounts having outstandings up to 2 crores and subsequently more than 2 crores. In the first case, RBI bore that hit. In the second case, over 2 crores, the banks had to bear that. And now what we can have is only the COVID restructuring package. If it falls into the COVID restructuring package, then you restructure it. You can give it based on the viability, a moratorium up to 2 years. And this will not be classified as an substandard. But the point is, there are certain conditions attached to it. So what you're doing is you still continue to make a provision, which is 10%, which is still lesser than substandard provisioning of 15%. What you do is that you don't classify it as an NPA. So your gross NPA percentage and your net NPA percentage is not impacted. Provisioning you still have to be made, and you'll have to see whether it is viable as per a resolution plan, as per a board approved policy, application for which has to be made by the borrower, who has to be a GST registered and an MSME. And facilities up to only 50 crores can be restructured. That's the only concession is there. And this is also a recap of what we already spoke earlier. I hope I am clear. Any questions? Very complicated subject. I tried to make it as simple as I can. And I hope I have understood it well. I hope you have also understood it well. Any questions you can still ask me. So can we take into the issues of divergences? Yeah, with the permission of the convener, can I go on? Hello? Fine. I hope I can go on.
Yes, sir.
Yeah, okay, fine. So let's look at the divergences in NPAs. And RBI requires if the divergences in the PSU banks are more than 15%, then you disclose it in the accounts, notes to accounts for public consumption. One. Second is the institute in its guidance note on banks has given an appendix. There are 7 case studies on why divergences happen. So please read the guidance note on banks also to understand the case studies once again. Now there are certain issues which auditors should purely look into. And these are 9 issues which I have brought. So let me go one by one in each of these issues. And these are key issues. So whereas the earlier ones were basically discussions on one NPA was and the various provisions, this is ideally on the actual practical issues which are there. So the point number 1. This was on the purity of the master data in the CBS. Whether it is sacrosanct, it is protected, or is it not that somebody is going and changing either the NPA flag or going in and changing the date of repayment. So finally, in a system automated NPA world, is the processing of NPAs happening correctly? So we may know all the 90-day norms, we may know all the restructuring circulars, we may know all the COVID packages, all the ifs and buts go for a complete toss if the calculation itself is not done correctly by the system. So are you comfortable with the system and the fact that it processes it correctly? Otherwise, if the processing is bad, your garbage in, garbage out will give you an unrealistic number, which maybe you may not even fathom what is right or what is wrong. So one is purity of the data in the CBS, the key of all. The second is, let's say the data itself is fed wrongly. The due date is written wrongly. The interest rate is written wrongly. The moratorium is fed wrongly. Then the entire NPA calculation will go for a toss. The second is, it may be fed incorrectly, but some friend of the borrower or somebody who has colluded with the borrower may go and unauthorizedly tamper the rates of interest or the installment numbers so that the initial feeding may be right. The recent tampering will again take it back to square one. So one is the purity of data in the CBS. The second is any manual intervention or unauthorized alterations in that data which is entered in. And the third is calculation of drop hour. That's where everything goes for a toss. What is drop hour? Simply nothing but stocks, debtors minus creditors, but stocks which are realizable, which are not slow moving, which are not old and obsolete, debtors up to a particular level as per the sanction, and creditors have to be subtracted as there can't be any double financing. So is the debtors and the stock and the creditors the actual figure? Because if you see the balance sheet, audited financial as of 31st March 21, and if you see the stock statement as of that day, there'll be a huge variance at times. And even the stock auditors, which is mandatory over a particular threshold, may show a variance in the drop. Now, if you substitute the drop with what is fed in by the bank as a basis of the stock statement given by the borrower, then the account may be continuously overdrawn, and it might result in that being classified as an NPA. So are the stock statements correctly reviewed, correctly submitted, is what one needs to see. And if it is done deliberately and it is a huge amount, and it may tantamount to a fraud also. Now the fourth point of divergence is generally when there are repayments only at the year end. So the account is an NPA for most of the part of the year. Let's say a CC which is overdrawn continuously, but on the last day, on the last quarter, it comes up with some money and just deposits it. Now, where is the money coming from? Is it an evergreening or a window dressing? Which is one more point. Or whether that money has come in because a loan has been sanctioned to somebody else, and from that money in the loan which is sanctioned is transferred to somebody else to basically obviate the trail or camouflage the trail so that it looks like a genuine trade transaction of money being bought in as a result of either a collateral sale or a business good sale. But the RBI circular clearly says that in case there is an inherent weakness in the conduct of the account, and such recoveries at the year end may be taken with a pinch of salt, and the borrower has to be genuine in the source of the repayment, and the bank has to satisfy the auditor that the performance is good and the transaction is genuine. So this is year-end credits. Most of the recoveries happen at the year-end. So please look into the source. It should not be an accommodation entry. It should not be an entry taken just to ensure that the account goes out of the NPA. And that follows one more norm of evergreening. And evergreening is just nothing but padding. It's maybe robbing Peter to pay Paul. So give a loan to somebody's friend or relatives and then get the money back and repay the NPA and maybe get it in order so as to artificially reduce the gross and the net NPAs. The next is the quick mortality. Quick mortality are accounts which become NPA within 1 year of the disbursement. Now, why should an account become NPA so quickly? Is there a faulty sanction or a faulty review and supervision? And is there any lessons we can learn from this so that we plug this next time? We plug the inherent gaps in credit due diligence. So quick mortality account is one area we need to look into. Then you have the balances in sundry advances, sundry debtors, sundry creditors. And some of these could actually be advances and it need to be provided. And some of these should actually be debited to the borrower account. And if they were debited to the borrower account on that day, the validated entry was passed, these accounts would be NPA because then they could be continuously overdrawn. Especially an invocation of a guarantee or a devolvement of an LC. Are these debited to the CC account or are these debited to a separate account? If they are debited to a separate account, it is not a correct practice. They have to be debited to an operative account, which is the cash credit. So if the cash credit is already overdrawn and as a result of this debit, it further goes overdrawn and crosses a limit of threshold by which it is not possible for the borrower to get it in order, then there's a possibility the account could be an NPA and also the business operations may come for a standstill. So just look at devolvement of LCs, devolvement of guarantees, invocation of LCs, whatever the LCs guarantees, if they get converted into a funded advance, please ensure that they are debited to the CC. Also, any other balance in sundry advances or debtors, or for that matter, even a positive recovery lying in sundry creditors needs to be reduced. Then whether there is a willful default, a siphoning and diversion of fund is something which each bank needs to look into, and there is an RBI circular on that, as well as there is a specific policy also of the bank. So are you a borrower not paying the bank loans, but throwing lavish parties all across the globe, or maybe posting your pictures on social media celebrating and not paying pittance of the loan repayment amount and spending at least XX times of that repayment on personal gratification? Or what happens when the account becomes an NPA and suddenly the stock statements don't start coming? Why? Isn't that a fraud? Isn't that a siphoning of fund and that's why it's a fraud? And I mean siphoning because what has an NPA got to do with stock statement being zero? And what has a stock statement which of, let's say, 28th of February was showing a stock of 10 crores. Suddenly, because it became an NPA on 31st March, subsequently the stock statement is not submitted. And the borrower who had done a stock inspection somewhere in Feb and found stocks worth 10 crores suddenly goes and finds stocks worth nil. Now, where have the stocks vanished? Isn't that siphoning of securities pledged to the bank without their permission? And wouldn't that be tantamount to fraud? So fund diversion, siphoning of funds, willful defaults, is one more point, point number 8, which we discussed. And then finally, are you going to get back the money? And in the pandemic, many borrowers have died. And subsequently, either there has been a complete recovery and the entire outstanding has been recovered, or subsequently an account which shows inherent weakness all along, this became an NPA. Now, would you classify such accounts as NPAs as of 31st March? Strictly by one letter of the law, no. But another letter of law which says of inherent weaknesses in account should straight away be classified as NPAs if subsequently they also become out of order and whatever recovery was there before 31st March, that's not genuine. And it's maybe a subtle way of evergreening or window dressing. And such accounts need to be classified as an NPA. I would just end this with one thing. Please, if you want to classify an account as an NPA, and you'll have to pass an MOC for it, please pass the MOC and give details of the MOC in the LFAR. Please don't give details in the LFAR and not pass the MOC. The LFAR is not a substitute for the auditor's report. And any changes in the auditor's report by way of an MOC tantamount to a qualification. And it's subject to that MOC that the accounts give a true and fair view. And if the MOC is not passed, it will not give a true and fair. And putting it in the LFAR without stating so anything, and just stating that these accounts give a true and fair view, but in the question in the LFAR, as the bank correctly classified advances, you will say no, and you would say these were the MOCs we passed. Then why have you not qualified the audit report and passed the MOCs? Just by stating these were the MOCs that could have been passed in the LFAR will not absolve you if you have not passed the actual MOC and not impacted the balance sheet and the P&L. So please pass MOCs rightfully wherever you find a rightful deviation. Don't pass MOCs just for the sake of passing an MOC. And whenever in doubt about the interpretation of any issue, please clarify. You have your regional council members, you have your experts in your profession, in your area, or maybe you could pick up and phone any of the faculties or those who have written the guidance note or your central statutory auditors. Any of them you can contact and get your doubts clarified. So have the boldness and have the courage to call a spade of spade. Have the conviction to put things right in the right perspective. And with enough issues being raised about audit quality, recently it's time we proved our audit quality. We would say no to any dropping of the MOC under pressure or duress, if there is any, or any carrot or stick to not pass an MOC. Let's do our work as diligently as we can. And MOCs in advances are not uncommon. And any MOCs as a result of deviation in IRAC norms is also not very uncommon. So let all of us do our duties properly and just enjoy the process. The audit season has already started. We've all got our appointment letters from most of the banks. Today was the first day. Maybe most of you could have even gone and have an idea of the branch and maybe done the cash verification and maybe some of the stationery or the security form checks. And and maybe you have enough time to digest, go through the guidance note on audit of banks, especially the chapters on NPAs, retrospect or introspect both on what you have listened or read in any of the ICI journals, or maybe any other videos which are bought out by the institute, and just do your job fearlessly. And that's the institute song as the motto. Yaeshtu Sutteshtu Jagruti, which means one who is awake even when others are asleep. So I think let's not fall asleep at any point of a second also while we are doing our bank audit, and ensure we get out these divergences or deviations in case they are, with extreme and complete due diligence. So enjoy, stay focused, clarify, and if in doubt, qualify. Our audit report is our only Brahmastra we have in our hands to set things right. So let us set things right as they are. Thanks. And any questions I'm willing to take and clarify. Thank you.
Thank you, sir. Thanks a lot for this nice deliberation. Now requesting Pratik Chaudhary to please, our deputy convener of this study circle, to please take some questions. Pratik, are you there?
I can't see Pratik. Oh, he's there.
Surbi, you can take, please. Yeah, Pratik is there. Pratik.
Yes, I'm there. Namaste Abhijit ji. Sir, सबसे पहले तो मैं अपना क्वेश्चन से स्टार्ट करूंगा, being given this chance to ask questions. Sir, evergreening के बारे में we were listening in some bank audit workshop few days back. So, sir, evergreening is okay and acceptable, or should we protest if suppose loans are not being paid off and being renewed automatically by issuing a new loan? So, what's the policy or guidance to an auditor? Because just now I was there in some another bank briefing workshop. They said evergreening is a general practice, everyone is doing it, there's nothing wrong about it, so why do you speak about it? So I'm surprised, I'm a little confused.
So who said that? Was it coming from the bank?
Yes, sir. From the bank side, they said that every bank is doing this, every gold loan company is doing this. So when we have collateral, I mean, this is exactly what bank manager also told me last year when I was auditing. We have gold security in our hand. So what's there to risk as a bank when?
So what is rollover? Rollover in a gold loan, what RBI insisted that the loan should be repaid, and then you can sanction him a fresh loan.
Right.
It's not that the rollover है कि due date पे सिर्फ interest ले लिया और वो loan को extend कर दिया. Now again, I may excuse him for one time. I may not excuse him for the second time, though I should not even excuse him for the first time. So rollovers are evergreening or window dressing, so they are hiding the fact that technically the borrower has no money to repay. So if you see most of the gold loans, they are in extreme poverty. That is why they'll pledge a loan to take gold. And if they can't repay it back, that means they don't have any funds. There's no way of the amount coming back. Now, selling the security is not the bank option. The bank goes by cash flows. Selling the security is the last resort. Now, most of the banks also do this, but there are a lot of banks post RBI strictures have stopped rolling that over, and they insist on the repayment. And they are very strict. If you don't do it, we'll sell the gold, we'll auction it. And that's when the borrower begs, borrows, steal from somewhere else and gets in the money and repays the loan. Now, these are basically small loans. Ticket size maybe 2 lakhs. For in most of the cases, when it's given as a bullet loan for a repayment, or in other cases, it's a repayment where you collect the interest also at the end of the repayment period. It's not collected upfront in many banks. But to answer your question in short, it is not an accepted permissible practice. If it is done, it's not correct, it should be done. Now, if you do it as a practice in the bank, and at a branch, even if you make a change, it will not have an impact unless it is changed at the bank level. So please communicate to the statutory auditors, this is what it is done. These are the accounts which are rolled over. And if a uniform policy of rollovers is followed at the bank level, then these accounts will need to be treated as an NPA. And these will have to be provided for at this rate. And maybe interest, if not received, will have to be reversed off. So you'll have to qualify it. And also bring attention to his fact that this is not a qualification applicable to a branch. It should be a qualification which should be applicable at the bank level. So just check with the central statutory auditors if he's okay with it. Tell him to give it to you in writing. I doubt whether any central statutory auditor will give it to you in writing. If you ask me as a query, as an expert panelist of the Accounting and Assurance Standards Board, I will put it in writing that according to me, it's an NPA because it's a rollover loan. And RBI goes by the record of recovery. RBI doesn't go by the collateral security. So in my opinion, very clearly, it is an evergreening and it needs to be classified as such. Maybe even if I give him a benefit of doubt once, still it is not right, I would say. But yes, maybe if you want, you could give him because the amount is immaterial. Amount is too small if you consider the individual case and the individual ticket size. Maybe you can even check this from Sandeep also. What's his view, Sandeep? I may not permit it.
Yeah. Yeah, Abhijit.
Full or koi? I
So
don't
we
think
were asking question to Abhijit sir about evergreening of gold loans. So sir would like your inputs on that.
नमस्कार संदीप जी.
Namaskar.
Yes, Sandeep ji.
Sir, Vijit ji has just recalled you for regarding your views on the evergreening of gold loans. How? What is
in
your
my
views?
opinion is very correct. Here, evergreening is not permitted. It is a clear cut. And if it is rolled over more than once, it's a clear cut NPA. Even if there is a security, because it has got nothing to do with the record of recovery.
Yes,
it has
actually, especially
done
with
clearly
gold
with the
loan,
record of recovery,
especially with
and
the
there is
gold
no
loan,
cash.
I would say, that's the situation because gold is just a security.
And I have cases where RBI has classified in banks where I am the statutory auditor. They have said that this tantamounts to a rollover and should be classified as an NPA, or this practice should be discontinued. So maybe they have given them off with a warning once, but the next time they are very clear that this practice will not be permitted. You clear off the gold loan, maybe you take a gold loan the next day, but you can't just keep on extending the loans by just repaying the interest.
So it's
And
very
this is
clear,
not in
sir.
gold loan, it can be in any loan. It
So,
can
sir,
be in any loan.
for our delegates, it's very clear, sir, that security doesn't define the NPA classification. It's the RBI.
Perfect.
Yeah.
Perfect. It's the RBI letter of the law which defines the classification as an NPA or not. Period.
Perfect. Any other question, Pratik?
That I could see on chat box. I would request for delegates who want to ask something, they may raise the hand or they may unmute themselves and ask directly to the speaker.
I think there is no question, so we should go further now.
One more question I would like to ask here, sir. In this CIBIL report and this renewal of loans, banks are supposed to update the figures and the CIBIL ratings and the history in the system and then review the rates for whatever loan is going on, say for cash credit or something. So if the branches are not doing and renewing it directly there, are we supposed to report something there, or we give our opinion about it?
See, so if the branches have not reviewed the CIBIL rating, recent one, and if the borrower has borrowed from some other sources which it is not known, and if he has defaulted on those loans, then obviously it becomes a much riskier prospect. And I am not looking at information for monitoring which I should look. And maybe I may not have sanctioned him the loan. I would have recalled the loan, or I would have put some more conditions, or I would have reduced his limit. And I would have forced him to maybe repay a part of the amount now. Or it could be also that it could be consciously that I know that he is in a bad state and I'm consciously turning a blind eye to this, which is tantamount to a fraud. Again, fraud is something which is done with intent. And fraud is anything, an act of omission or commission, as a result of which the borrower is getting some facilities which he will not have enjoyed prospectively. So even inflation of stock statements or drop over is a fraud. What you are saying, if it is done deliberately to conceal something, as a result of which the borrower will not be prejudiced and he will continue to enjoy his facilities which otherwise he would not have. And again, it's a deliberate act of omission. And deliberate act of omission, if you look up the dictionary meaning of fraud, it very well falls in that criteria. So it's definitely our duty to basically report it in the LFAR and maybe even ask the bank to basically look into by the vigilance whether this is an act of fraud or not. Now, we only bring it out factually. We don't verify and investigate whether it's a fraud. Let the bank take a call or let the bank discipline them appropriately.
Yes, sir. Thank you. So, Sandeep, over to you.
Yes, sir. Just last questions are related to review and renewal. In many cases, due to the client side or due to the bank side, this doesn't happen within 6 months. So, what should be done after 6 months? If whether
so
in the strict
RBI
sense,
circular very clear: if the renew or the review is not done for 6 months, then it becomes an NP. So a lot of times banks, what they do is they do something called, they should call a short review or a technical review, and just गाड़ी को आगे ढकेल देते हैं. So it is something similar to a rollover. In principle, there is nothing called a short review or a technical review. And one more thing is कि nothing is also a complete review, because information भी bank को कभी पूरा मिलता ही नहीं है. So ideally, whatever is done is not a short review, maybe it may be a 3/4 review. It can't be 100% review at any stage. So the point is it something which in spirit accommodating the borrower, or it is something which is genuinely temporary because of pandemic, information nahi aaya, ye nahi aaya, but pandemic is now much behind us. We can't look at flimsy excuses. RBI का letter of law clear है, 6 महीने के ऊपर नहीं हुआ तो NPA. It is not based on the record of recovery in this case. It is based outside the record of recovery. So even if there may be ample security and otherwise he may be repaying his installments or his account may not be continuously overdrawn, but because of the clear-cut letter of law which has been violated, this will come as an NPA. I may give benefit of doubt in a genuine case, अगर कोई genuine reason है, but I will not give him benefit of doubt otherwise, because if the bank manager is too lax, knowing fully well what the circular is, and it deserves to be penalized.
so sir, whether review and
maybe
renewal,
resistance आएगा, but that is what I said. You need the skill of being bold. You need the skill of courage. You need the skill of being fearless. You need the skill of learning to say no means no. I will pass an MOC, so I'll pass an MOC. This is what it is. This is the guidance note in black and white. This is the RBI circular in black and white. This is what I've asked my other peers. They have told me this is what you should do. Period.
perfect, sir. Thanks a lot, sir, for this nice deliberation. Now I request our treasurer of the study circle, Surbi Boraji, to please give a vote of thanks. Yeah, Surbi.
Thank you, Sandhya. Thank you, Abhijit sir, for giving us this wide knowledge on the bank audit subject and for clearing so many doubts and making it more clearer for us. It has been immense pleasure to listening you throughout the session and having our views cleared and a lot of more addition to our knowledge. Thank you for that. We also like to give you a token of memento, our Eid memento. We'll request you to please add on to your gallery for the purpose. Thank you.
Thank you, sir. Thank you for this 1.5 hour bank audit session. Thank you, sir. Thanks a lot.
Before Abhijit leaves, I would like to thank him for last minute accommodation. I genuinely thank you.
Now our next speaker, Sandeep Ji Welling, has joined. So before that, requesting again Surbi Ji to please introduce our next speaker, Sandeep Welling.
Thank you, Sandhya. Well, Sandeep sir does not need any kind of introduction. Still, we'll do a bit. He is a partner at Kirtane Pandit LLP, and he has got over 30 years of experience in assurance practice. He is a speaker at various conferences and seminars at national and international level for banking sector. He has been a member of ICAI committees and expert panels to deal with various regulators dealing with business law, especially with the RBI for past 12 years. And he is on ICAI ASB board that issues pronouncements on all audit related guidance to the members. I welcome sir to please address us with his detailed speech on bank audit and help us understand it in more detail. Thank you.
Thank you, Surbi.
Thank you.
Yeah. So delegates Sandeep Welling sir will take the LFAR. What are the changes and how we should report? Yes, sir. Over to you, sir, please.
Yeah. Thank you, Sandeep ji. Yeah. Can you see my screen?
Yes, sir.
Yeah. Now.
We can. Perfect.
So basically, I'm happy these days, the specific focus on LFAR is increasing because see, LFAR is one such document, frankly speaking, which is seen by the regulator. So happens that many times, whenever I have seen the comments of the regulator, or you can see widely in the newspaper, etc., and generally there has been, a loose comment what auditor has done. Now, when I went through some of the cases, and then I realized that, frankly speaking, it was not the auditor who was at a problem. It was not that auditor's negligence or he has not done it. Many times we fail to project that we have done the job. And that is where we need to improve as a community. Because finally what is seen is believed. And LFAR is a document that is seen by the regulator. He judges whether you have done your job, you have not done your job. All of that is actually judged through this document. So this particular document has really assumed a lot of significance, not only from the point of view of conclusion of the audit, but also from the regulator perspective. And that's how we look. That is number one. Number two, many times it so happens that, all these years, you will realize that regulators are trying to convey us in different language that they want chartered accountants to be part of the entire governance chain. And sometimes if they feel that we are not seen to be ready to be part of their chain, they come up heavily on us. So please note that this document is no longer the previous document where the previous document was 30-year-old document. It belonged to pre-computerized area. So auditor then was expected to collect the data for the regulator. Now auditor is not expected to collect the data. Now auditor is expected to provide the right insight into the data. And now I will go through the nuances of LFAR, and you will realize that how auditor is been asked to become part of this entire chain. Not only that, you will realize that in our audit report, we just give true and fair. Fine. True and fair includes so many things. Now regulators is pinning down on us on various issues, wherein the entire document called LFAR is nothing but affirmative confirmation to the regulator. Generally, when we audit and when we give our reports, it is only by option, whereby if there is some problem, we write it. Here, this document actually expects us to give affirmative confirmation. So let me just go through, before I start on LFAR, these are certain things which are a complete prerequisite. If master circulars of RBI, closing circulars are very crucial because they give you a lot of information on how to go about it. And our guidance note. See, I'm also on the panel of that expert committee which keeps on replying within 24 hours. I have seen people ask questions and we realize that they have actually simply not referred to the guidance note, because guidance note covers all the circulars up to 31st of March, and it probably over the period covers every aspect that are being asked by the various qualified auditors. So before I move ahead, I would like to share some of the comments. You know, RBI, SSMs keep on meeting the CSAs every quarter. And some of the observations they have put to us, I would like to share with you, which will open our complete mindset with regard to what exactly auditors are expected from their eyes. So expectations from the statutory auditors to display a greater degree of skepticism and independence. Now, this greater degree was debated a lot during our session. So, as a part of our audit, we keep on anyway exercising skepticism. What is this greater degree? So, basically, what RBI is now trying to say, or what regulators are trying to say, the next point is, if you see system-based classification, all of us are aware that this year there was a direction from Reserve Bank of India that all the NPAs calculation, categorization, IRAC norms are fully system-based. They are no longer dependent on the interpretation of the officer. Having said so, the question mark on greater degree of skepticism enhances further, because if 90% of the queries that we used to get was on IRAC, I'm sure you will agree. Given this situation, it was observed that many frauds or many mishaps in the banking systems have taken place, wherein the account has slipped from standard to direct loss. I have dedicated some specific slides on this topic during my presentation for us to, understand where I'm coming from. So this greater degree of skepticism is nothing but read between the lines. There are enough signals available. Many times we allow a particular situation just because it falls into the dotted lines, within the dotted lines. Whereas we see it could skip, it could spill over, but because of the boundaries, strictly later boundaries, allow certain things, and that is where the judgment fails. There is one more thing. Look, this is what regulators are saying. They are saying we are not taking confirmation. They are saying audit sampling is not maintained. Now, to handle this issue, certain aspects in the LFAR are taken care of. Remember this. IMF, World Bank has recommended that they should have explicit authority on the working paper. It is our institute which is standing so behind us that no, working paper is a subject matter of our property. But if such a greater degree of skepticism is not used, it would be a matter of time for the regulator to leave the well. So remember this, that our documentation, our sampling has to be so well managed, and we are giving affirmative confirmation to Reserve Bank of India in the LFAR. Let's talk about it. I have not included certain clauses in my presentation which are routine, like cash, accounting, etc., etc. They are self-explanatory. I have tried to cover only such things where such debate or discussions may invoke. So if you look at any advance having exposure of 10 crores and above, or 10% of the branch exposure. So if your branch happens to be 50 crores, then 5 crores and above. But generally 100 crores and above, if the branch is there, 10 crores and above should be your minimum criteria. Now, to address the sampling issue, Reserve Bank of India is saying, list down the accounts you have chosen for the purpose of audit. Majority of the questions would be relating to these accounts. So imagine they are pinning us down. So in some of these accounts, if there are some mishaps, some reading between the lines does not take place now, and things go bad, Reserve Bank of India has a data as to which account was chosen for an audit and whether auditor was diligent in exercising his greater degree of skepticism. Let me come to the points. All of us are aware that any account that slips into, say, substandard within 12 months of the date of the sanction is called a quick mortality account. Now, if there is a quick mortality, there is a severe penalty or a punishment to the sanctioning authority. So somehow they try to push it beyond 12 months. And therefore, any account which has slipped into SME, I'm not saying substandard, SME, please choose it for the purpose of your audit. However, for the purpose of listing down, you will list down only those which are slipped, which have gone beyond. Because mentioning certain data unnecessarily also would cause a problem to us. So mention only those above 12 months. But my suggestion to you, for as a matter of checking, pick up all accounts which are in SME and were sanctioned within last 12 months. That would be your quota for or a sample for the discussion. Next. Now, if you were to look at, I will whether the borrower accounts applicable interest rates. Now, it may so happen that if the branch selected given to you has been selected by the bank for the purpose of IFC reporting, this would anyway come as a part of your checking. But if it is not, many times it so happens, we have observed that the sanctioning takes place, some changes take place, but some data goes in which may not match. So at least in case of accounts which are chosen by you, see to it that the rate of interest is accurately put. Valid credit rating. Now, what happens? Nowadays, we know that any account which is 5 crores and above requires a credit rating for the CRAR calculations. Now onwards, so people are, if it is above certain limit, 2 credit, I think 50 crores, 2 credit ratings are asked for. Now, in such cases, the credit rating has to be valid, number one. And if 2 ratings are available, you have to choose the which is unfavorable. So whether accordingly a bank has taken or not is something that we, so any account which is 5 crores and above will be the sample for this particular question. We come to next. See, sanctioning and disbursement. Sometimes it so happens, this was the case with us last week, where everything is smooth. Account is running smooth. However, my disbursement date was prior to, or prior to the date of complying of the terms and conditions. Documents were submitted post disbursement. Now this is a breach, and therefore it needs to be pointed out in under this. So look at the fine points that Reserve Bank of India is asking for, and the reason they are asking for is it was observed that it was these issues, some of these issues have caused bank a great loss in the subsequent years. Such loose tendencies by the management has created this problem. One more thing I would like to share with you. There is a great difference of attitude in management at the branch level and at the top level. See, somebody sitting at the top level wants everything to be given to him with transparency. Because if it is a problem account, he might as well address it. That at that level of maturity, they are not looking at, convincing auditors to postpone. They are far more matured and they take decisions in a very, smooth manner. However, at the branch level, the interest could be different. And therefore, the argument and the friction at the branch level is far, far more as compared to top level. And therefore, it is necessary that such fine aspects when asked for, especially when you have given a sample and you have given answers to these questions, it basically means that you have checked. So the answers today are not abstract. They are not your mere opinion. They are out in the public and they are with respect to the samples you have put in your report. So please understand this problem. Did the bank provide loans to companies for buyback of shares? No. frankly speaking, such a question is difficult for us to answer because if lap is given, it is not possible for us to understand whether it was used for a particular purpose or not. And therefore, in such cases, I suggest that we should take a management representation. Review. Just now, Abhijit was talking about these aspects. Some of the large banks have configured these issues, through system, wherein 2 short reviews, if done, the third has to be the proper review. Otherwise, it automatically slips into the substandard. So, however, many banks may not have done. There is a tendency that only change the date to camouflage the system. Now, at least in case where you have chosen, you will see whether reviews are not pending, or if reviews done recently, whether the papers are available. Otherwise, they simply change the date to avoid downgrading. And they will say, okay, documents are coming, don't worry. This is my difficulty. They'll come up with 10 difficulties why it could not be done. Look at your perspective with the top management. Don't look at him as your client, and you will have many answers. Here, so it is expecting us to list accounts which are between 3 to 6 months, and if they are over 6 months, anyway they will be downgraded. So if you list here, see to it that they are downgraded. Stock, good debt statements, periodic operational data, is DP calculation. Now this question, again, at the cost of repetition, would like to tell you that it is for those accounts you have taken up. And therefore, I would stick to my original comment wherein, when you start your branch audit, please segregate and let somebody start writing this LFAR right from the day one, because it is he who will keep on asking for the data for the other checking team. This checklist would help him to get the data in the right perspective. Don't do the reverse. Reserve Bank of India has always been saying, that, slowly, they realize that there is chartered accountants have too much of obsession about NPA and provisioning. Whereas there are several other matters that actually affect, so we wait for the trigger date and then feel happy in providing. Reserve Bank of India say, no, don't wait for the trigger date. Tell me, give me these signals. Give me these signals ahead of time so that we can repair it. So our job now is not about correct provisioning. That is slowly taken over by the systems. Our job is to tell the management, the regulator, what is heading towards that trigger. And therefore, these questions are really helpful to us. With regard to stock audit, there is one funny thing that keeps happening. Stock audits are not allotted by the branch. They are allotted by the zonal offices or regional offices. Whereas branch, when we audit, you will have all kinds of situation. Anything, first of all, any account which is 5 crores and above is eligible for stock audit reports. So stock audit has to be conducted for that account. Now, you will see all kinds of observation. If it is 5 crores and above, either stock audit not allotted. if allotted, not commenced, if commenced, not concluded, if concluded, report not submitted, if report submitted, not taken cognizance of. Everything. And this is where, I have seen many times that stock auditors have really done a job good, and they give us a lot of insight into that account. If there are some adverse comments, specifically ask, please let us know. So basically the reason why now audit at the branch is necessary is because of all these issues. So not merely provision. Provision is now taken care of mostly. There is an element of some discretion or judgment which will come in even today. But these are some of the outside provisioning aspects which are becoming crucial now for the purpose of branch audit. Indeed, get the cases of advance and non-corporate. This is a very old issue. Actually, we had requested Reserve Bank of India on this clause, but it has not come to. See, issue is when we say audit, generally for a non-corporate entity, we are given tax audit report. But tax audit is not audit. Tax audit may not have concluded on all the audit standards expected, and therefore it may not be complete. However, it is left to the bank, and in most of the cases, this would be not applicable clause because no bank has taken us any hard stand on this because they fear loss of account. In respect of advances examined by you, have you come across deficiencies, including value of security? Now, many times we come to value of security only when it slips into D1. As such, provisioning is not available at the branch level, but value of security, yes, we do look at. Now, there are 2-3 aspects that I need to talk to you on this. And that is, valuations have to be, first of all, within 3 years. That is, every one of us know. Second thing, there are 3 types of valuation: market value, realizable value, and distress value. Generally, during the course of continuance of the account, the realizable values are considered and not market value. Especially if an account is slipped into substandard for the first time. My suggestion and request to you would be, though not applicable for the purpose of provisioning, look for those accounts to answer this clause. Because this is where the bank takes a major hit in the subsequent year. And suddenly the scenario changes. And therefore, it is necessary. See, even if you look at the earlier clause, deterioration in the value of security, at least in case where accounts we have chosen or high value accounts we have chosen for the purpose of audit, even though they are standard accounts, my request to you would be, look for the security value, whether they are intact. Because today the trend is standard to loss. And this is where we need to take care very efficiently. I'll give you some examples, that no, but I'll give separately. Okay, so I'll give you some examples where we could find such things. Now, whether the branch has any red flagged accounts. Red flagged accounts I will talk about later because it's a detailed topic that I need to talk to. Comment on adverse features considered significant in top 5 standard large accounts. Remember this, not top 5, because out of top 5, 3 could be NPA. Here, Reserve Bank of India is clear. Top 5 standard accounts. And this is where the real game in terms of our greater skepticism also comes into picture. I'll just give you one or two examples. 2 years back when we were conducting an audit, I had been to a branch wherein there was one account with 40 crores limit. It was absolutely a good account, good turnover, security levels, all documents intact, everything fine. No problem of whatsoever nature in that account. However, while going through, I realized that 80% of the purchases are from related party and 100% of the sales are to related parties. And that related, and during the year, fund-based limits are reducing and non-fund-based are increasing. Now, this was a trigger. So the question was, are we financing this company or we are financing their sister concerns? As far as I know, that account even today is running well. But this is the aspect which was brought out immediately, that this problem is there with this account and therefore it needs to be A, corrected, or B, very closely monitored with specific comment on the related party. So this is how the extra skepticism. One more account, I remember 60 crore account, 400 crores turnover, but the turnover in the account, if you take the summation, is only 200 crores. But accounts are signed. It's a corporate entity. Signed accounts say they have a turnover of 400 crores. Now, such anomalies, I won't go into the details of that, right? But that particular account, although was standard, when we pointed out, it was debated till top and they took a suo motu action and downgraded it. It was not auditor's recommendation that it should be downgraded, but these anomalies were, and we had said that it's a standard account because there is no parameter why we could suggest downgrading. But we had given those, but it was well debated and they said, no, this is a problem, we should do it. So that extra skepticism is nothing but trying to, I'll tell you one famous case of with some diamonds. In that company, 6 public sector banks and 1 foreign bank. Foreign bank was the lead bank. Total exposure was 6,000 crores. On the date of the default, the foreign bank had 0 or a nil exposure, and all the public sector banks had to take a hit. Why? We had carried an investigation there and we realized that the story started 2 years back. He slowly started bringing in all top-notch bankers, CGMs and EDs retired on his board. And a day came wherein he said that I want my company to be run by professionals. I don't want it to be hindered by my interference. So I am resigning. I will look after my other venture in Dubai. And he went to Dubai, leaving all to professionals. and 100% of those were bankers, EDs and CGMs of the bankers. And ultimately, it so happened that the sale was to Dubai, money stopped coming, and all the bankers continue to face even today, those on the board. Why this happened? Because, and why foreign bank did not have. When they saw this happening, they started reducing their exposure. Our bankers started taking more, thinking that, oh, good, such a good client we should take, such a good client we should take. A greater degree of skepticism. So when you read, when you look at the review monitoring, these are some of the points which are generally you will see very evident, but we find them insignificant because we are obsessed with the trigger line, whether it is NPA or not. We should share that mindset, and let's talk about our skepticism while reporting. And that is where we will also help the bank, we will help the regulator, and we will help ourselves. In respect of leasing finance, now generally in leasing finance, what happens? Different types of facilities going around, and we observed that finally the security is debtors. There is nothing else with them. The same amount of debtors are shown everywhere as a security. Now, it is not possible. No? It needs to be bifurcated within the, or parapasu, whatever needs to be done among different facilities. So there is a specific circular of Reserve Bank of India, which I have quoted, which may have to be referred for the purpose of ensuring that if there is a leasing finance activities going on, we should be taking care of this. I won't talk much on the IRAC norms because somebody in advances may have spoken, or in most of the cases, these aspects may have been taken care of. But one thing I would like to share, this D here also indicate required changes have been incorporated. Many times it is observed that in LFAR, we see many comments by the auditor, many comments, but it falls short of conclusion. And that is where the problem starts. I'll tell you why. I was a CSA of a bank, and I had one such account wherein he had written this problem, that problem, that problem, that problem. Bank should have done that. Bank should have done that. But he did not suggest MOC, nor has he passed MOC. Auditor thinks that I have reported, I have done my job, I leave it to you. No, sir. RBI is very clear that when you are auditing a branch, that is a complete entity. The materiality limits are within the boundaries of that branch finances. And therefore, when you have signed that as true and fair, it's true and fair. It's true and fair at that level. After looking at those aspects, I was not comfortable and I wanted to pass MOC. I had a very stiff opposition from the zonal saying that if you are going to do that, then we will stop branch audits. He has looked at his report. He has given a clean report. That is his comment for future. He has not suggested in the MOC. So don't think that writing many things without passing MOC would absolve us. Okay. Okay, it may so happen that CSA would be also taken to a task, but the person who has signed also would be called for and taken. And it has happened in many cases, wherein the branch auditor is directly invited by the Reserve Bank of India. So don't think that merely writing comments help. No. List the accounts with outstanding more than 10 crores and above, which have been downgraded with regard to classification. Okay. So there are and upgraded. Downgraded to fine. You will anyway have. Upgradation is very critical because that's a deliberate action. That's affirmative action. And therefore, you will see many times that certain accounts, they keep on going down, coming up, going down, coming up every time. Now, in such cases, all of us are our IBC also talks about any account that slips into SMA category, not even substandard, SMA category, should be observed for 6 months. Even if it comes up, if it goes down again into SMA, it should be referred specifically for investigation. It should be referred for special attention. And therefore, this clause, see, every clause has some repercussions somewhere. And therefore, we should not conclude unilaterally about its utility in our reporting. So, therefore, by virtue of such lectures, even I want to tell everybody that, look, this is the repercussion that it may trigger. It may trigger, it may not trigger. But downgraded and upgraded list should be given. And when you give, your interpretation would come into picture. So this is another way of affirmative reporting which is taking place. Now, next clause is far overreaching, and in my opinion, it's part of our opinion, because recovery, though there are changes, I would say 99% of the branch auditors will not face these questions, because recoveries generally do not take place at the branch level. There are special branches, or it is transferred to zonal offices. Now, however, in case there are any, well, we need to look at, but 99% you will not have recovery cases at the branch. This is now another crucial aspect. They are saying, list the borrowers where the LCs have been devolved and guarantees have been invoked. It doesn't say standard, substandard. Even if the best of the account in the branch, if LCs are devolved, they may have been made good subsequently. But don't wait, because these are the triggers for the future. If devolvement has taken place, guarantees have been invoked, list them separately. If not, you have to say that no such case is found. So again, affirmative confirmation. Next one, if you look at devolved but not paid. So they may have been within 90 days, they may have been downgraded, whatever. So the lot of data is asked upfront, and we are providing that as a part of our audit report, which has completely different significance. List the instances where interchangeability between the fund-based and non-fund. Now, there is a tricky situation here, and generally you will not find now because the bankers have become smart in a way, because if interchangeability is given at the sanction level, RBI says fine. But if it is given at the time of SMA category, then it's a manipulation. So if such a case has happened, then it's a manipulation. Otherwise, if it is available at the sanction level, it's fine. And therefore, generally you will not find, but in case someone comes to that situation and does that hurriedly, and by chance, if that happens to be your branch, it should not so happen that you get caught into it by giving a wrong report. So ensure that such a thing is not. Deposits generally is an ignored item for our statutory audit. There is one clause that we need to take care of in, I think, 2015 or 16, 15. There was a big debate in Parliament on chargeability by the banks for low minimum balance. Huge sum, some bank, one bank had collected over 100 crores. And that's where the debate started, that banks are looting, people are poor, etc., etc., etc. So Reserve Bank of India came up with this guideline saying that, well, chargeability has to be there, but see to it that it is not unreasonable. So it is expected. Generally, if you ask your branch manager, he wouldn't have answer because he will say everything goes through system, which is true. So it is suggested, because this is a specific certification required to be given by the branch auditor. You will see in your appointment, one of the certification would be this. My suggestion to you would be pick up 4 or 5 items, minimum 5 items from profit and loss account where such, if there are any charges levied, and manually calculate whether the rate of interest or that penalty charged was right. Keep it on your record. Documentation is necessary. So 5 samples is something which is recommended. Bills payable and sundry deposit. Again, accrual is one part, but sundry deposits is a very vulnerable. There could be situation where EMDs are there. You will see long-standing EMDs suddenly disappearing. Could be an incidence of fraud. We don't know. So any settlements taken during the year needs to be validated. Number of items and aggregate amount of old outstanding. Take age-wise. Take last year's age-wise. And if you see material difference in the earlier years, check those debits. See to it that they were genuine. Some furniture contract, 8 years, 1,20,000 or 83,000 EMD pending. No, that contractor may have been appointed for large number of branches. He must have forgotten that 83,000. Somebody could produce false bill and take that away. See to it that they are, if there are debits, they are genuine. Here they are specifically asking, items, pending items list, specifically asking. So see to it that you are taking care of those aspects in the right perspective with greater skepticism. profit and loss account. I won't elaborate more on that. I need to move to something which is crucial. MIS, all of us are aware that branch manager generally ensures the well-being of the branch through different types of MISs which is generated. However, many times it is observed that such are not observed very properly by the branch manager because of his exigencies. Many times you will have many answers to your question through this MIS. So some of the MIS are, there is one thing which is every bank will have, which is called differently in different banks, but that gives a complete X-ray of the entire advanced portfolio. Its outstanding, its summation, its security, its status, everything. And that report, DP, everything. First date of repayment, last date of repayment, ideal balance, everything. And 80% of the observations or rather samples for our observations come through this. Besides that, review renewal, stock statement, all these come. My request and suggestion to you would be, while answering this question, ensure that you have gone through this, because it should not so happen that there are genuine issues with some of those and you are not reporting it, which is readily available. This is where I say, affirmative confirmation. These are some of the affirmative confirmations that we are talking about. Frauds. This is a very significant thing. And I would like to share certain data to you. Now these slides are in relation to those only. These are some of the issues. Slowly, they are being curbed. Okay, but these are the aspects which have led to divergence. As Reserve Bank of India officer thinks and as auditor thinks. This is where the greater degree of skepticism comes into picture. You may find this in order, but in their opinion, if this thing happens, it's a problem. I would come to the specific thing. RBI has come up with one circular on red flagged accounts, early warning signal. The circular is May 7th, May 2015. Okay, and I would request, suggest, or rather insist that all of us must have that circular in our file. It's a fantastic circular. Prima facie, if you look at that circular, you will think that it's not applicable to me because the applicability of that circular is to the accounts which is 50 crores and above. And you will rarely have it. However, please note, if you go through that circular, a fabulous circular, and that gives you so much of insight into what Reserve Bank of India is talking about, has greater degree of skepticism. There are 45 instances that Reserve Bank of India has listed in that circular. And they say, even if there is a standard account, and if you find some of these aspects into that account, please consider it for red flagging. So this is where, again, I would bring your attention to that top 5 standard accounts which you are choosing and you are commenting on, affirmative commenting on. This circular will come handy too. See, if you look at the number of frauds, they are increasing. And what Reserve Bank of, why 50 crores? Because they realized that 80% of the frauds, all frauds, were involving 50 crores and above. Which is why they have taken 50 crores as threshold. But for your branch, if you reduce the threshold to 10 crores, you will have many answers through that. %90 of the frauds in credit portfolio. Opening current account with other banks. All of us are aware that Reserve Bank of India came up with a circular that outside consortium you cannot have a current account. Yes, a good circular, but you know what happened? All private banks who were having, or all banks who were having the current account outside consortium, they converted, they requested the borrower, give me 2 lakh rupee deposit and I will convert your current account into OD. So technically, they are out of the clutches because it's no longer a current account. They have done this to every month because nobody wanted to lose their account. Now, obviously, if such a thing is found in your review renewal in the standard account, in my opinion, it should be a subject matter of concern to us. And especially if that balance or that transaction summary or that statement is not available with your bank, it's a greater concern. Please note, some of these aspects are very crucial for us. Some more things. So, what Reserve Bank of India is saying, these frauds have taken place not just because the fraudsters were smarter. There is every reason for them to believe that this could have been avoided if delays were not to take place. Again, here the auditor role comes into picture because, like I said earlier, we have been obsessed with provisioning. If provisioning has taken place, we think we have done our job. Sir, but remember one thing. If I am a fraudster, I am happy being provided, but I am dead scared if I am declared as a fraudster. Because if I am declared as a fraudster, all my roads are closed. But if I am provided, some bank will open the door for me. I am just a banker. So delay in recognition is the real reason why frauds are taking place. So that reading between the line, that greater degree of skepticism is something which was there, but we were refraining from reporting, should now come on the paper by virtue of our this affirmative, different various affirmative confirmations that we are giving. Delay in reporting CRIL 5 crores and above, we know CRIL reporting has to be done. Somebody slips into SMA 0, comes out. Now, once it slips, it should be reported. But branch manager says, I will try to bring him out. My report is a good client of mine. Now that delay sometimes causes, not everybody, 98% of the people would be genuine, but those 2% have caused this huge fraud. So remember that such delays, such administrative delays. So basically, any observation of ours, which hitherto we were considering as administrative observation, stock statement not received. Okay. Stock audit report not received. Okay, aega. Acrylic reporting not done. Oh, because he comes out. He is making an effort. Why trouble? All these administrative delays, and we have been writing, but we have not been interpreting. So have that extra skepticism in your mind that it could be deliberate and not just a matter of chance. Have that sense when you are doing your audit and when you are actually selected those accounts with respect to those accounts. So delay in filing complaints, poor credit or fraud, that is a overall. So these are some of the early one, the circular that I spoke about. These are some of the issues listed in there. Critical issues highlighted in the stock audit report. Poor disclosure of materially adverse information. Related party transactions are there, but the values are not given. I've seen such reports. Frequent changes in the scope of the project. Liabilities appearing in ROC, not in the search report. Not routing sales through consortium. I spoke about it. That 400 crores turnover, but 200 crores only in the bank statement. LC is issued for related parties without underlying trade. Rates. There may have been rates. Account is running fine, but raid. It's a signal. Significant reduction in the stake of the promoters. Pledging of shares. Anywhere where promoter is trying to escape is a signal. So there are such several signals. I have listed some 8-10 here. There are 45 such, which Reserve Bank of India has given to us upfront. And if we don't make use of it, well, we are putting ourselves into risk and we are putting the entire governance chain, into risk. So this was actually a broad changes that have taken place in LFAR, and therefore I feel that every time we start audit, start right in the beginning. Consider it to be your checklist for the purpose of audit, and you will have answers to many questions. Anyway, the chances of you missing on any aspect are next to nil if you have observed, followed LFAR meticulously right from the day one. Don't rush it at the last minute. I spoke about ICFR. I spoke about that's it. So ICFR certification also may be taken by you all. So I thank you. If you have any questions, please let me.
Yeah, thank you, Sandeep sir. Delegates, any question if you have, please raise your hand so that we can have some question answer session. Pratik, are you there? Sir, in the LFAR this time, I think there is no changes from the last time, no? It's the same.
No, same.
It's everything is same.
Yeah.
And
The
sir,
only thing is, I'll tell you what happened up to last year. Ever since it was introduced, all of us were doing online. So is the real test.
So basically, sir, one thing very confusing related to LFAR Annexer 3, in which they have to annex the 10% of the total advance, or the 10 crore, whichever is lower, all the advances of that branch related to that.
वो पहले जो 2 करोड़ था उसको 10 करोड़.
हाँ, 10 crore कर दिया सर उन्होंने. तो sir, you have told that this includes fund based and non fund based both. It means out of the book also, non fund based will, like non fund based, if any branch have 10 crore and fund based has the 10 crore, then 20 crore of 10%, or how it will be calculated?
Total exposure. Reserve Bank of India talks about exposure.
Okay.
So exposure means fund plus non-fund. So 100 crores का अगर आपका एडवांसेस है और 100 crores का non-fund है, exposure है, तो 200 crores का 20%.
So sir, exposure means outstanding amount or sanctioned amount?
Exposure basically means sanctioned amount, but for the purpose of our reporting, it is outstanding.
It's outstanding only, right? Because term loan weight decreases, then it should be the outstanding amount.
For
only.
the purpose of audit, it is only for the purpose of CRAR calculation. You can say exposure लेते हैं. For the rest, for our calculation of अपना fee भी actual outstanding.
Right, sir. And nowadays, most of the banks management are talking with the statutory or central auditors that what should be the limit for Annexure 3 for the branch auditors. Whether statutory auditor, whether they have the power to give any suggestion on this.
10 करोड़ के ऊपर है, देखो वो 500 करोड़ करेगा तो 50 करोड़ के ऊपर वाला नहीं करना. 10 crores is the threshold
minimum, but they want a minimum, like small branches, they have only 5 or 10 crore of turnover. They also have to fill the whole annexures for that.
No. So if it is, for example, a 40 crore branch, so any advance exposure above 4 crores above will be listed.
Yeah, 10% is the minimum.
Yeah,
10%.
So basically, your question, see, when it goes to central level, it may not be considered for the purpose of consolidation.
Right, sir.
So for consolidation, let me be very clear, anything below 10 crores will not be considered.
Yeah.
But आजकल मेरे ख्याल से 40 crores का branch देते भी नहीं.
हाँ sir, 40 crore.
40 crores का branch देते भी नहीं.
अच्छा, नहीं, non concurrent audits में यदि है, then they will.
तो possible होगा. Possible होगा. तो possible.
Because small branches, main sir ये problems small branches में आते हैं. Otherwise big branches में तो cover.
Yeah.
So nice hearing you, sir, from the starting to end. It's a LFAR, all the gist that you have given to us. It's a very fantastic session, sir. Just a small token of love from our side, sir. 1 second. And last time again, requesting delegates to please participate. If you have any question, sir is there to deliver it. It will be very. Sir, this is a small token of love for the digital library.
Thank you.
We will send it to you across through WhatsApp also.
Yeah.
Nice session on LFAR, sir, because LFAR is very important.
Yeah, very important, I would say. Very important.
Just because it's, you have rightly told, sir, most of the times they are not, auditors are not passing the MOC and just writing to the LFAR. It's not serving the purpose LFAR for which we are appointed. So if there is any MOC required, then we have to give to the MOC. It's not the LFAR will serve the purpose.
Yeah. And one more thing, see, no longer the situation where you take last year's LFAR, पहले जो करते थे, and किसी को बिठाया आर्टिकल को पिछले साल का देखो और भरते रहो. It's a sure nosedive for us.
So, sir, it's the LFAR is the process wherein from the starting day you have to consult each point with the auditee.
It's a basic checklist.
Basic checklist.
Basic checklist.
Right, sir.
Everything will flow with that.
Right. It should be the starting point, not the ending
point. It's a starting point.
Perfect, sir. Perfect.
Thank you.
Thank you, sir. Thanks a lot. Once again, sir, we have our founder member Hari Ramji Agarwal. Are you there, sir?
Yes, sir.
Yes, sir. Please have some words.
Hello, sir.
Yeah. Good afternoon, sir. Sandeep, sir. And both the Sandeep I am seeing on the screen only. Along with me, two Sandeeps are there. So very nicely crafted the program. Sandeep ji, congratulations and good attendance. And the way you have explained the points of LFAR, as that is the point of view that it should be the starting point, not the end report at the end. That is the big thing. So what we should do, that is the point. And as you rightly said that what RBI is asking us to do, or what they are thinking about us or our reporting, or we the professionals, how we are conducting, that is all reflected in LFAR. So that should be keep in mind. All the fellow professionals who are doing the bank audit must keep that thing in the mind. That is the viewpoint. And the technical points are there. So many technical points. Once they are doing it, they will finding it that how to proceed with each and every point there. So very nice. Thank you. Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank
you. Thank you, delegates. Tomorrow we have the session on audit planning and documentation. Very important. And the CBS controls and how to audit in the this digital environment. So we will join tomorrow 4 o'clock. Thank you for your presence. Thank you, sir. Thank you.
Thank you all.
Thank you, everybody. Now we are closing the session.